Hello and welcome to BQ Prime. I'm Hiral Dadia. One company that is in focus is RITES. Joining us on the show is Rahul Mithal, Chairman and Managing Director at the company, to decode the numbers for us and give us more information in terms of what's in store going ahead. Good afternoon, Rahul, and welcome to the show.
Good afternoon.
Right. Rahul, overall, taking the Q4 numbers into consideration, firstly, has it met your internal expectations?
Let's break down the numbers. Uh, Export revenue, which is one of my major key contributors, is down year on year by about 70 to 80%. Now, that's a high top line, high bottom line contributor to the revenue. Now, in spite of that, if you see year on year, the revenue has been flat. And in spite of such low contribution from one stream of revenue, my consultancy stream of revenue, which is my core strength, saw 1189 crores as the revenue, an 18% jump year on year, the highest ever consultancy revenue. And because of this jump, you see the bottom line, the profit grew by about 6 to 7%. We were able to improve on our margins. Our EBITDA margins and profit margins increased by about 1%. So we have a safe margin of about 27% in EBITDA and a PAT margin of about 21%. So even though there was such depressed, muted contribution from an important stream of revenue, our core strength, consultancy, and that's the USP of our company, that we can pick up, and we were able to still give a profit of 6 to 7% growth.
Right. So if you could help us understand, Rahul, in terms of the export side, even in the previous quarter, we saw a plunge, and the key reason has been that there has been deferral of inflows in FY24, right? So are we expecting FY24 to be then much stronger, specifically from an export perspective?
You see, export of rolling stock revenue stream of ours, we had two major orders just before COVID. And these were for Mozambique and Sri Lanka. The shipment started post-COVID. So that's why you see in 21-22, there's an all-time high of about 966 crores revenue from this stream. The balance portion was shipped out in 22-23, and it's about 300 crores in 22-23. And as of 1st April, only about 100 crores is left, which is going to finish in this quarter itself. The key focus in this stream of revenue last year has been to engage with all possible clients, as I mentioned last time, across Africa and Southeast Asia, to be able to tap their demand and get a finite order. There is a lot of pent-up demand in these countries, but post-COVID, they are getting their funding mechanisms in place. And now we are at a very advanced stage of getting few finite orders very soon, so that our aim is that this stream of revenue starts contributing to the overall revenue by latter part of this FY.
Right. So what's the anticipation in terms of order book that we are expecting, or we are building into our strategy for FY24 from exports?
From this particular stream, as I said, the order balance is only 100 crores. And the aim is to get order. We are tapping, as I said, a number of prospective clients. We are hopeful that we should be able to, as I said, get some finite orders very soon, maybe as soon as this quarter. And this these order book would continue growing. That's our effort as over this FY. Export stream by nature has a lead time of generating revenue. The rolling stock gets manufactured and shipped out, and that's where the revenue starts flowing in. So our aim is to get an order as soon as possible in the next month of this quarter, so that by latter part of this FY, the revenue also starts coming in from this stream.
Right. So overall, if we have to break this up between turnkey and consultancy, right, how is FY23 revenue contribution looking like between these two segments?
See, FY23 consultancy.
Sorry, I mean 24, I beg your pardon.
So building up on the consultancy order book as we have today, our 5850 crore consultancy is the total order book, out of which about 2700 is the consultancy order book. This itself saw a 30% jump year on year. So 2100 crores went up to 2700 crores. This last quarter itself, we have got about 70 plus orders totaling to about 780 crores. So moving forward, our growth and last year FY to FY 18% growth in consultancy revenue, as I said, we should be definitely able to capitalize on this growth, on this order book, not only get fresh orders across streams of revenue, across the various infrastructure sectors, but also execute the existing consultancy order.
Okay. So with this, what's the kind of growth we're anticipating for FY24, and how much of it would be coming in on the back of the consultancy business, and how much of it will be coming in on the back of the turnkey business?
You see, we are very clear. Our core strength in our business model is we are a consultancy company. And that is what helps us grow on our margins, secure our margins, grow on our profit, even though temporarily there's a setback in one stream of revenue. Turnkey saw a major jump, and that was primarily, even though it's a very low margin business, about 3 to 4%, it basically props up as a temporary stopgap measure for this period while the export contribution was low. Moving forward, this contribution from the turnkey segment will gradually taper off as the export order book builds up. We will continue to leverage our consultancy business. Our order book has seen very good growth. We have got some good, very big orders recently. We got a Jal Jeevan mission order in Rajasthan for about 148 crores. We got a Assam health order about 80 crores. We've got a Kerala infrastructure of order of about 50 crores. So this is constantly going to grow. And with this, the focus on growth in the bottom line, which has seen about 6 to 7% last year, year on year, would be our aim to improve on that.
Right. So, Rahul, overall, would it be right to say that our revenue contribution, specifically if you see from the consultancy business, which is now little above, in that range of 45%, could grow above 50% in terms of contribution?
Yes, for sure. That's the aim, that moving forward, aiming to at least touch 50% and cross it on a steady basis. Maybe some quarters, there may be ups and downs in terms of the mix of revenue contribution, but analyzed over a period of time, say a 6-monthly or an annual basis, the aim is that consultancy contribution remains at least in the range of 50% or more.
Right. And if that is the scenario, and taking into consideration that the consultancy business is absolutely margin accretive, by how much do you think we will be able to improve our margins and profitability then?
You see, maintaining margins of EBITDA margin of 27, 28% and PAT margins of 21% is itself is a very tough call, considering the kind of competition we are seeing across sectors. Having said that, in spite of this competition, our consultancy, our domestic consultancy margins grew by about 3% year on year. And overall consultancy also, we could see a good margin. And that's primarily because we are a double-pronged strategy in consultancy. One, targeting niche and good and high margin areas in domestic consultancy, and aggressively targeting international consultancy. So under our RITES initiative last year, international consultancy saw a growth of more than 50%. And we are pitching very aggressively for a number of international consultancy projects. And I see this trend growing. And that's a high margin area for consultancy. So combination of this would see, our aim would be to at least secure the margins, if not improve on them.
Right. And when you talk about the quality assurance as well, now, railways is almost a 2/3 contribution. Non-railways is 1/3, and the strategy is to go ahead and increase the non-railway side of business, right? Now, if that comes into consideration, do you think there will be some bit of a setback on the QA contribution, because we are seeing a lot of other sectors that will come in? And if yes, what is that going to look like?
Yes, I mean, that's a very correct assessment. You see, with the railway QA business opening up to 3 more players, where the impact is both in the top line and bottom line from the railway QA stream, our effort has been to tap more and more non-railway clients. And one major fillip in this has been we recently got the ISA certification a few months back, which we are the only second company in India and the only PSU in India to have that ISA certification. So with that, a lot of more prospective clients open up for us. We get more areas which we can tap in the non-railway sector of QA business. So the first goal would be in this FY to reduce the impact as much as possible from the impact of the railway sector QA business, and be able to maintain at least the past trend, and then further moving forward build up on that.
Okay. And overall, if you see, in terms of the Israel JV as well, what's the update on that one? Because clearly, we were looking at orders from this business as well in terms of the metro network. How much contribution are we expecting in FY24?
See, metro business is our very core business. We have been getting orders. We got a few months back the Ahmedabad phase 2 metro order. Most recently, just last month, we got the Hyderabad metro order, which is again a very good order of ours. As far as the Israel metro order is concerned, it is still under evaluation by the authority there. And as soon as we are hopeful, in case we get it, we'll definitely apprise the stock exchange.
Right. And we've been also working on the station development orders, right? So are these the same ones that you're talking about when you talk about Ahmedabad and Hyderabad, or are they different?
No. I was talking about the metro consultancy order. So the Ahmedabad, we had done the Ahmedabad phase 1 metro consultancy. Few months back, we got the Ahmedabad phase 2 metro consultancy order. And recently, last month, we got the Hyderabad metro consultancy order. As far as station development is concerned, we are part of the Varanasi station, the Ayodhya railway station. We recently, a few months back, got the order for the Kollam railway station. But primarily, these are turnkey orders. Moving forward, while we would take periodically some turnkey orders, but our aim is to take consultancy orders in station development also. So, for example, we recently got an order for consultancy for the Somnath station. So that's our strategy moving forward in the station development area.
Right. So overall, my last question coming to you is, with all of this said and done, for FY24, what's the kind of capex we are going to incur if there is any addition? Two, the focus is going to be in terms of consultancy from here on, which will be EBITDA and margin accretive. And finally, what's the growth overall that we are looking to aim to achieve in FY24?
So you see, as far as capex is concerned, we are a very low capex company. We do capex around about 100 odd crores. That's the trend which has been, and that's what is going to remain. So our focus is we are an asset light company. As far as consultancy growth is concerned, this will remain our vision, our aspiration, our focus area. We are a premier consultancy company, and we will continue to grow in this area. So if you see, as I said, 18% growth year on year in the consultancy sector, which gave us an overall bottom line growth of about 6 to 7%. Combine this with as we get some export of rolling stock orders in the coming months, and they start contributing by latter part of the FI, which is also a good margin stream of revenue. So I definitely, we aspire and aim that we build up on this single digit bottom line growth to aim for at least a double digit bottom line growth. That's our aspiration. That's our vision. We are a bottom line driven company, and all our efforts will be directed to secure margins and aim for at least a double digit growth in the bottom line.
Right. So double-digit growth in the bottom line is what we should be watching out for. Thank you, Rahul, so much for having this candid discussion with us as well, because absolutely in the interest of all the investors. And clearly, if you see, a good strategy from here on is what we should be watching out for. Thank you. Stay safe and speak to you soon again.
Thank you.